It's Tuesday. My computer has not had a break. Welcome back to the channel. Welcome back to videos. I is currently looking to take a trade on TradingView, but before we can, we have to look at news because news is important. At 10 a.m., we have an orange folder. Michigan Manufacturing Index. Actual grade and forecast is good for currency, which means if there's a green number here, it's going to go down. That is currently the only thing that we need to be concerned with at the moment. Looks like our exit strategy was a valid one, though price continued lower immediately after. Price took off. We caught the indication before it was too late that price was in fact going higher, which is good for us. It was very fortunate that we got out when we did. We could have made $3,000. Technically, we did make $3,000. But man, would it have sucked had we gone all the way down here in the span that it took price to jump from here to here off of one candle. That would be an hour, right? It would have sucked had we come up here and lost all that money. So, my takeaway from this, my exit, is that the strategy works. Use the same strat again today, and hopefully it'll work the same. Fingers crossed. We're going to implement the same method we did yesterday for the entrance too. Except this time we're going to be a little bit more accurate with our reading. We're going to set up our highs and lows throughout the sessions. We're going to enter, or we're going to look around for key levels such as a fair value gap, kind of like this one. We're going to look for order blocks, breaker blocks. We're going to look for price to respect over a large spread equilibrium. And we're going to look for imbalances in order to get the best entrance possible. And at the end of the day, we should be able to identify where price is going to go. From that, make a trade. Let's go ahead and remove 13 drawings. Remove 10 drawings. Zoom way in here. Boom, 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 boom. Good. So I'm working off of what TJR had to offer the last time I watched one of his videos. 18. Three. Eight. Yeah. From here we go down to the 5 minute. Boom. Ouch. Price action is quite choppy at the moment. Go ahead there. Gold. Then over here on the 30 minute, we're going to do this. Man, it's just super choppy at the moment, isn't it? Right now, there's the lowest point it's hit. And I can't identify a higher point except for this way up here. And it's not until we get into this session here that price is pretty much there. So we're going to mark that and understand that this is actually this high off of this. Or look at the lowest point here. Good there. Identify high, up, down, good. And that is the highest point is reached since. And it has not been passed up or down. That is a large range from low to high on Asian session. That's actually quite crazy, to be completely fair. That is a large spread indeed. Crazy. I have me breakfast in front of me. Definitely gonna be enjoying that here soon. So let's go back up to the hour right quick. Because we were able to identify stuff last time. Okay. We have fair value gap here. Was it invalidated? Yes, that's an inverse fair value gap, which means we should be looking for price to continue on downwards. This fair value gap is the imbalance we're looking for. This is a key level. This is something to look at and be respected of. So last time we identified an imbalance like this, we essentially said, okay, what exactly happened from here back this way? Well, for starters, the most obvious thing, huge leg down. We caught this leg pretty late in the game, but okay, better late than never. We caught it late, we exited on time, and from that, we got a profit. Well, since then, we've had one leg up. This leg respected this fair value gap. It was not until this leg here, the one that disrespected this fair value gap, that price chose to change. Continue higher. And it's not until this candle here completely shatters through these next two fair value gaps, reversing price completely. So now we're looking for price to continue higher based on this move up. Fair value gaps are signs of continuation, and inverse fair value gaps are signs that price wants to change. The general direction was down, but as a result of this, it's up. It's also fair to note we have not had a break of structure yet. Wait, have we? Yeah, we have right here. We had a closure above a high, making this a valid break of structure. And of course, the endless inverse for value gaps as a result. So we're looking for a breakout. We're looking for this fair value gap to be respected. And today, specifically, we're looking for price to continue above this key level. We're looking for price to continue above this key level. We're looking for it to completely reverse its trend. We're looking for it to come up above this here, which is a valid high to be marking. And in the event we see it disrespect that fair value gap and continue on down, making it an inverse fair value gap, stopping this rise up, we're looking for it to go as far low as these two lows here. Just because it looks like this is the only other low within this session, I'm going to mark this low as well. Because, if it disrespects it, I'd like to have an equal amount of potential take profits. And just so we're on the same page, There's also an inverse fair value gap right here. We also have an inverse fair value gap right here. And the only purpose these fair value gaps serve are for key level sakes. And we're only really paying attention to the top one here. Let's go ahead and just annotate that, shall we? Because we want this right here, this fair value gap, to be respected. To support the claim, the idea that price is going to continue higher off of 1, this break of structure, and 2, 3 inverse fair value gaps that it's made over the course of 1, 2, 3, couple in between, let's say 9, 10 hours. That makes the most sense to me. It really does. We can have dips into this. We can have this key level hit. What we're looking for specifically is not just this key level to get hit, but we're also looking for, guess what? This key level to be respected. That's how we know. That's probably going to be my trigger. Because we can hit this all day long, but unless, one, our building blocks say, yes, price is going the opposite direction, we're not going to enter. I want to see exactly when price is going to turn around and continue higher. That is our goal. And we have plenty of take profits from here all the way up through this. It's got plenty the whole way up. Currently, we are still working with London session lows. I marked this as the high. The low just changed. Look at that. And this is not going to stop moving until this candle right here closes. Or, sorry, this candle right here opens. This one closes because this is the price action we're after. This is the price action we're waiting on. Plain and simple. From this, we go to NASDAQ. See what NASDAQ's doing because that's going to give us a better picture as to what to expect from the S&P. Good. Good. Oh, oops. Wrong line. Not you. I need this a lot. There you go. Good. I think NASDAQ is lagging behind the S&P because looking at this low here, I'm looking at it about to get passed. Or do anything else on that. Oh, we actually got it. Okay. So we got it as it formed. That's good. Outside of session highs and lows, what I'm looking at this high here. Is it above? Yes. Price could continue higher there, or it could continue lower here. There you go. From this, we have our spread. Highs and lows all throughout. So I'm looking at this. We have not a break of structure here because, again, up, down, high, boom. We're looking for this to break out of this. And as far as we're concerned over here, this has not broke structure. So price has potential to go down per the NASDAQ. Everything about the NASDAQ says it's going to continue down outside of the fair value gaps that it has been disrespecting. Triple inverse fair value gap here. That is currently what we're looking at. This is currently what we're after. Now the question becomes, is price going to go below this? Is price going to go below this? If it goes below this, it works. What do we look for a break of structure in on an uptrend? Because we don't care about this now that 1, 2, 3 invalidates all of that, right? We're looking for a break of structure, specifically, to confirm above that price is going higher. That's what you look for in a downtrend, a higher high. So price continue up. What do you look for in order to identify prices now going in a downtrend? Find a low, closes below the low. This candle, or this candle, you got to close below this current low here. If it does, the resulting gist, price continuing down. That's how that works. I'm glad I did that video Saturday. I learned a lot of myself. Looks like the NASDAQ is lagging behind the S&P 500 at the moment. But at the same time, we want to make absolutely certain. So we're going to wait for our key level to get hit. What key level might that be? Fair value gap. This has got to get inverted. And this has to be a well-defined closure below this low. This low has to result in a continuation confluence down. What would that be? A fair value gap. Outside of inverting this, it's got to be all the way down. And this is on the hourly time frame. With the exception of a few fair value gaps here, not inverting anything there. What are fair value gaps? Signs of continuation. On a higher time frame, they hold higher power. I'm not looking at a fair value gap going up. I'm looking at a fair value gap going down. I'm not seeing a break of structure on the daily. Outside of this mini retrace up, but as soon as we did that and inverted this fair value gap, we see price continuing lower. That's currently what I'm looking at. And we've been in a downtrend for the last 3 weeks. So that works. Let's go to the hourly. Boom. 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 Good. Boom. Same story here. Mini retrace. In an uptrend, what do you identify? A closure below a low. Technically, right now, the downtrend has ended and is looking like it's wanting to reverse back up. So we have conflicting time frame confluences at the moment, right? That's currently what we're looking at. And it takes days for trend to change on the daily time frame. That just makes the most sense. So we're trading within trend now. The daily says the downtrend is over with. Why? Because we had a closure above this. We've had our break of structure in the past. Last week, this looks to be Wednesday. Yep. So last Wednesday, we broke structure, closed up above this. And I believe this was a heavy news day. But immediately after, it didn't leave any fair value gaps. No signs of continuation whatsoever. Just a break of structure. A break of structure is a potential sign that market is going to change to the opposite direction. Not that it will, but that it could. Confirmation of break of structure. Fair value gap. Breaker block. Order block. Equilibrium. Those are the continuation confluences we look for after breaks of structure. After we see that well-defined liquidity sweep. It broke past, yes, this high here. But it wasn't enough to invalidate this fair value gap, we still have a fair value gap here. We actually, if we were to move this whole graph up, I'm pretty sure that this closure on down would still have a mini fair value gap between this wick here and this wick here. So as much as I'm looking at this leg up breaking structure over here, I'm also looking at this leg up respecting a fair value gap. And as a result, price is going lower. And just so we're on the same page, the only reason I'm using the building blocks on a higher time frame is really to determine what my key levels are, what I should be expecting of price. If it hits that key level, what it will be doing, and after which attempting to take the best trade off of larger time frame confluences. And I could be wrong. I could be wrong because at the same time as I'm looking at that, let's go back up to that. The same time I'm looking at this, right? We could draw a block over this, like over this body, move it up to where it just barely goes up to this, right? We could draw a block over each and every one of these. Pull it up to this right here. Get the wicks off the bottom. Get the wicks off the top. And just look at it from there. Do all of these respect a fair value gap between this candle and this candle? Right now, if you were to move it complete, like draw a big old square, move it up, no, it doesn't. It doesn't at all. No, it does. Because this, right now, with this in line with this closure is in between this. It's within this fair value gap. The wick, sure, it comes up and it meets this one. It might go even past it a little. But this closed inside the fair value gap, respecting it. The fair value gap being respected says price is going to continue lower. That's what it's doing. It's continuing lower. But before we can get to that, we have to ensure a couple things. One, we have to ensure that there are no breaks of structure throughout the leg down. And this is on the daily. Right now, we didn't get that. We instead got, or are about to get to, a lower low, which is good for us. This is exactly what we're looking for. We're looking for a lower low off of this mini retrace here. That'll be our sign of confirmation. And when it does go low, it's going to be a huge leap low. Huge leap. That's what we're waiting on. And again, we'll wait patiently because we have 1, 2, 3 days. I believe price is going to go lower on. We might have actually one day where price like mini retraces up, and that is starting to look like it could be today. Price is just going higher and higher. We caught this one about halfway through. So I know what to do in either case, if price continues higher from here or lower from here. I also know what to do in order to leave the market when necessary. I know how to protect what I've invested. And from that, I believe now is a great time to pause the video, come back for when this key level is disrespected, or we see a break of structure to the upside and a complete reversal of trend outside of this leg down. We shall see momentarily. BRB. Two things. One, in the spirit of keeping myself humble and having the accurate data the way it's supposed to be, I've elected to do the chart work on my phone as well. So that way I can get the most from this. And it works pretty good, actually. Did the same thing yesterday. It seemed to work out in my favor. This allows me to not only be accurate with the information I display on this, but it also keeps me informed on my own decision making. I have two screens to look at with the exact same chart work. One's a little duller, but more efficient to look at. The other is primarily for an indication base. It's supposed to be colorful, it's supposed to be vibrant, it's supposed to be in my face telling me every single move and mistake I make, right? I have two different variations to look at. Keeps me awake, so that way when I do make a mistake, it's easily seeable, it's easily readable, it's easily recoverable from. From that, yeah, it works. We're going to be doing the same thing we did yesterday. We're going to take a trade on TradeLocker and TradingView, and fingers crossed we can manage to actually get somewhere with both today. We only have an orange folder. That can be the difference between price continuing higher and continuing lower. I'm quite curious to see what will happen. And again, that folder is supposed to hit around 10-ish. So we'll see what it brings with it. We have 22 minutes for this candle to form completely. We'll be back when it's through forming, because it will ultimately give us the break of structure we need, or it won't, and in which case we'll be on to the next candle waiting for it to break structure slash give us the inverse fair value gap we're looking for off of this here. We're just waiting on it. BRB. Okay. So we had a break of structure. This candle here closed below this low. It's still within this, but it closed below it. Can you see it on this candle here? This candle closed below that one. That's what I'm looking at the moment. That's a pretty stark one too. Either off of this reaction, we're going to see price shoot far back up, in which case it will have broke structure a second time, and we will be on a incline trend, or it's going to break past below this current node, this current line, this right here, right? In which case we'll be looking for price to close below this fair value gap, and when it does, we will have a well-defined break of structure from this uptrend back down, and so we can reclaim all three of these. Our targets are here and here, but there's also potential for price to reverse in the opposite direction. We'll be keeping that in mind the whole way. We'll be keeping that in mind, indeed. Until it's done that, the video will remain paused to save you guys some time. We'll be right back. Okay, so an update on current events for this, right? We have a respected fair value gap. Looking at it per price action now, this candle is currently above this fair value gap. It's respecting it. So from here, what do I think is going to happen? I think price is going to go higher. My bias is okay with this. We want that candle to close. It's got another 28 minutes before it does. We'll wait for that candle closure. With a respected fair value gap, that is a key level being hit, in my opinion, in my eyes. From there, we're going to be looking for every building block under the sun that tells us price is going to go higher. So a confirmation that, yes, this is, in fact, a respected fair value gap, we're going to be looking for the inverse fair value gap. That is essentially from this right here on the 5-minute, because there is a fair value gap right here. Right? We're going to look for that inverse fair value gap. From there, we're going to be looking on the 5-minute again for continuation confluence, that being either a breaker block, order block, fair value gap, or equilibrium. And from there, after we get that, we'll have a break of structure to the upside, or an inverse fair value gap to the upside, in which case we'll see it continue higher. Is the strategy style solid? Is this solid? It should be, because I put a lot of thought into it. I think it's a valid key level hit if this is respected and price continues higher. Should we wait? I don't know. It seems smarter to me in order to wait off of this respected fair value gap for this key level here to get hit and closed above. That'll give me my not trigger, but the confluences, after which to go ahead and enter and just continue higher. So we did break structure back to the downside. So yeah, there is that mini break of structure there. We'll wait and see. We got 28 more minutes. From there, we'll find out one way or another. BRB. Okay, so we had our key level hit. As you can see here, I know that's actually very hard to see. Correction, we're about to have our key level hit. Our fair value gap, this one here, was respected, and we're watching price continue much higher. I think a well-defined, respected fair value gap is going to be that green candle I just showed you guys forming and closing above that line, that blue line. That'll be this key level right here, because it will have created that low. It'll have broke out of this downward trend, this mini downward trend that we find ourselves in. That's 2 seconds, and that candle is closed. Closed on it one. So we had a key level hit, and that would be our fair value gap. From here, we'd be going to the this, right? Because we saw price come all the way down, and now we're watching it. Actually, yeah, we see it go down into this. We created our key level from that. Guys, I'm still waking up. Don't mind me. It's 9 a.m. I woke up at like 5. I've been waiting for a minute now. We saw price come down. We marked our fair value gaps as a key level. We wanted to see this get respected. From this respecting fair value gap, we have a move up. This move up is going to close above this key level here. Not once this does, but right now we're going to go ahead and put our building blocks to this, because we want to see the most we can get out of it. What are we looking for off the gate, off the bat, off the cuff? Ready to go. We are looking for a break of structure. Now we saw price come down. That was the key level. Let's go to the one hour right quick, just to reiterate. It came down, we created this. And price had all this motion in this. Eventually getting all the way up to roughly where it is now, up here. A respected fair value gap was made. And as a result, we're now looking for signs of continuation in the uptrend. For this to work in our favor, we have to confirm that this is a respected fair value gap. How do we confirm that? Well, do this price up. This entire range right here. It was, and we were, in a successful downtrend. This was, in fact, a mini retrace back down from a leg up. What's the break of structure out of this downtrend? When a high breaks past the previous. Actually, it would have been on this one right here, on this candle. And from that, we have break of structure. Yay. Immediately after, we need to find a fair value gap, breaker block, order block, or price to go back into equilibrium. Price is not only in equilibrium, but we also got a fair value gap. We got, assuming this candle closes in the next 2 minutes and it's actually worth running, that is a fair value gap. Which I'm going to say it is because I'm looking at that, and it is, in fact, a fair value gap that's formed. What are we looking after that? What are we looking at after that? We go and find that fair value gap, then we go down to the 1 minute. We got to find a break of structure or an inverse fair value gap. Something that says price is going to go much higher. Here, and we got our break of structure on the 1 minute. And we've crossed into this line now on current price action. Our break of structure on an uptrend are the lows. We need to see price come back down on the 1 minute, close below a high. Actually, we have fair value gap formed here. This is at 8:45. Go down to 1 minute. Find 8:45. Boom. And that went on. We need to look for the break of structure because I wanted to count this one right here at first, because it closed below this low here. It even closed below this one here. This would have been an optimal entry to hit off of, but because we didn't spot the fair value up until 8:45, we can't count any of this. Instead, I think we're going to count all of this right here. We want to see price come back down, close below a low, and then continue higher. Our trigger is going to be after it's closed on the low side. We need to see an up candle immediately after go up, back up and above this. We want to see it go higher, not lower. From that, that'll be our entry, I think. It'd make sense to me if it were. So I'm also looking at this right here. 8:55. I thought this was a break of structure here. I identify a low, down, up, low here. It's got to close below that in order to be a viable break of structure that we can use in the market. Either that, or it's got to close below this and make an inverse fair value gap. At which point, that's the trade we'll take on a buy position, right? And I have to remember, this right here is 10 whole candles behind where we are. So count 10 in this direction, and we're like right in there. We're within that dotted line and the current price you're seeing on TradingView. There we are. Confirm. That is my entry on a buy position. Price is going higher. I'm going to do the same thing here. I'm going to press buy on this. Boom. Where do I want to put this? That's too close. I think I'm going to put it right at this fair value gap here, because we should be able to tell where that's going to be. We have all this way up here. We have this in here. It can go to, we even have this one way up here, but I think I'm going to be modest and say this right here, just to keep things roughly evened out all the way up to the top. We have 1687 versus 1387. We have a potential of making $2,000. We have potential of losing 1,005, roughly. Everything at the moment says up. So we're going to ride it for as long as we can, going up. Because that right there is the last high above this fair value gap here. That is a small fair value gap. There's also a fair value gap there that has yet to push past. I have a feeling, let's go ahead and mark this real quick. Boom, this, we're going to make this a red line. This is a zone to pay attention to because we also have a fair value gap in this right here that we'd like to see price come by and hit. It has a potential to hit that. We want to be extra cautious and make sure that is exactly what is going to happen. We want to make sure that'll happen. far we're doing okay. Just set my take profit and my stop loss on the app. What I did was I moved my stop loss back down to this fair value gap to the bottom of it. So that way, in the event it does come back down, we do see that it's trying to come back down from this right here before we get our take profit way up there. We can see it leave before it has a chance to come down here and wipe us out of this liquidity here. Because we are still in a downtrend for this right here. Until this move breaks past this high. This high right here. We should be well aware, I should be well aware that there's a potential for it to be reversed before it reaches that high. This could be a failed retrace, and we want to be very cautious about riding this high, riding it all the way up. We want to be very cautious. And that is what I'll be doing. I'll be very cautious about it. Okay. Well, that's the case, and you guys are able to see it the way I can as well. I'm going to let that play. I'm going to hop back on the internet and watch current price action to see what it's doing. I'll be back and forth between screen and this. With that being the case, I'm going to let this play out, and I will be right So, we did a thing. We did not close the position yet on Trade Locker or TradingView. We took a trade here into a buy position. We watched it soar up high. It's up here. It's gone past the most previous draw on liquidity, which is honestly what we wanted to happen. Currently, this is like right up in this, right? It went up high and it's speckled off and come back down a little. Like literally within this group of candles here. It's come back down. From it coming back down, we have a break of structure. We have one break of structure. Just one. Only one. On the chart. Nice. We have a break of structure. An inverse for value gap now. For continuation on that, we would look for the 1 minute break. We have a, break of structure and inverse for value gap, as well as a fair value gap on the 1 minute, not the 5 minute. If we were to go to the 5 minute here, pretty sure it's the same thing. Yeah, it's the same thing. So yeah. I think we missed our opportunity to leave. However, I'm looking at the hourly. Looking at something interesting that occurred. I'm looking at a high that was almost closed above. Right now, this is on a decline. Was it closed above? It was. In 6 minutes, it's about to get closed above. And if it does get closed above, per the hour, there is a strong possibility that's not inverting anything. That's legit breaking structure to the upside. Higher time frame holds higher confluence. Let's look at the 5 minute. 5 minutes still has fair value gaps going all the way up it. Higher time frame holds higher confluence. I'm going to wait patiently. The higher time frames hold confluences that we are going higher. How much higher? Potentially up to this high, potentially up to this high, potentially up to this high, potentially, oh, sorry. Can't count that one. Potentially up to this high, potentially up to this high, maybe even up to, I don't know, this high here. Super strong draws on liquidity. Super strong draws on liquidity at the moment. That closed above it, though. Without question, it closed. Well, yeah, we're going to wait and see because yeah. If it closes above it on the hourly, we'll hold on to the position. If it closes below the high, I'm specifically talking about this high here, right? If it closes below this, we will let go of the position, but if it closes above, we'll hang on to it and ride it out until it hits potentially take profit, potentially this high, potentially that's the only other high past this point here that it could target. And we have marked this zone as a potential. It could reverse back to the downside, and that is currently the concern. However, per the high time frame and this inverse for value gap here, as well as now a break of structure, if we get this break of structure solidified, we have the potential to continue much higher. Although the general trend is still down, to claim this high here would be perfect for me. To claim this high here would be even better for me. Either or. Makes sense, is just fine with me, to be completely honest. We have 3 minutes, 23 seconds for this candle to close. I will be right back with an update on the position. I'm going to continue letting this video play out so you can see exactly what the market's doing as I'm watching myself. From there, we'll dissect what we did and how it affected market. We could not affect market in this way, but you get the point. We're going to keep this on the hourly too. Once it closes on the Trade Locker app, I will go down to the 1 minute on this, and I will let you guys see exactly what I'm seeing at the moment, because I'm looking at the hour as well on Trade Locker. Like, we had a small retrace, and it's currently been broke past. So with that being said, I will be right back. Okay, so moment of truth. We have on current price action a leg up past this red line here. Moment of truth. We need to be on our tippy toes, on our highest awareness level when it comes to this red line to this green line here, because this is my final take profit. If we hit this, I'm closing the position, calling it a day, and that'll be a wonderful trade taken on my part. Currently, we have a leg back down into this little red line. We're gonna be very, very cautious, very, very, very cautious with it, because it is this red line that we're currently sitting at, right? We'll move that down to get it more accurate. There is no other high aside from this green line up here. This green line is what we're targeting. This is our primary target. If we hit this, I'm happy for the day. This right here, sketchy territory. I'm going to be watching that very intently for the next 10 to 20 minutes. I'm watching it like a hawk. I'm all over it. I'm here and attentive. With that being said, I'm going to disappear again, and I'm going to let you guys continue watching this form right alongside me, because I'm happy that the trade has gone well so far. We need to make sure that it's going to continue going well and eventually hit our final take profit. With that being said, be right back. Something I forgot to mention, or I haven't forgot to mention, we checked it earlier, just haven't been messing around with much else. Hang on. Allow me to get this here and display this here. News just hit. ECB President Lagarde speak. That's for Euro 9.59. I'm guessing they actually swapped the times because it's early. So actual is less than forecast, which means on this folder, well, if actual is greater than forecast, good for currency. Because it was less, a lot less, price is much, much higher. Much, 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 much higher. That's often news. Okay? That's from 9.59 all the way through to where we are now. So let's go ahead and just check that right quick, shall we? Get off of that. 9.59, where are you at? That's 55. So here, here, and here. All three of these were news candles. All three of them were. We're in trade still. All three of these were news candles. So, what does that mean? Well, I'm not seeing a serious gist off of this. Sure, we got a fair value gap. It came back down. The reaction was it cleared it up. I'm also looking at a candle back up, clearing this high right now. And I'm seeing a down candle that has not breached past this fair value gap. It has not closed below it. We are still within structure to continue upwards. I imagine due to news, it's going to slow down a little bit in its incline. We'll see a little bit more retraces every now and then up and through this. I think we are going to 100% make a profit up here if we were to hold on to it. I think that is the direction it's wanting to take. Let's see what it does. I'm going to continue holding on to it. I'm going to leave the screen just like this. I'm going to mute up. I'm going to disappear. I'm going to continue watching current price action, see where it's going. I'm going to watch it very closely, observe it. From there, let's see if we have a decent trade, shall we? Welcome back. Hello. Hi, what's up? You have been watching this screen this entire time, looking at essentially this slow, steady move up, thinking I'm gonna fail, probably, thinking a bunch of other stuff. Let me remind you. We bought in down here, and my pits have never been as sweaty compared to, like, they haven't been this sweaty since I quit my job, bro. We made a successful trade. We made it. This buy-in here paid off. We hit our take profit. 32.25. We hit it. Mr. President, we got him. We got him. I'm going to let this continue playing out, but just so we're on the same page, so we could see exactly what I'm talking about, I'm going to go here. That right there is what we just took. We took that whole leg up. We made a 21.26% profit off that stop loss. And it was a... What was this? Hang on, let's just view it on this. This is a long position. We entered off of this here. Our stop loss was like... It was below... It was at this fair value gap here, and our take profit was all the way up here. That was a 2.28 take profit to risk to reward ratio. There we go. Our R&R ratio was this. Mid-trade, we did this, which is not something I recommend doing, but we did this here. We changed it from this to this. Just below where this starts, we did that, resulting in a 5.06 increase, a risk to reward of 5.06, and it worked. I mean, we're there. Again, I'm gonna let this play out. This is probably one of the more successful trades. This is one of the more successful trades I have ever taken, and I'm not gonna lie, slightly sketched out by it. Because I know it's not the standard. I know it's not where we wanted, right? We entered off of knowing this fair value gap was respected. This candle could have easily gone down and stopped us out. We entered on this candle going up. We entered off of confluences from this respected fair value gap that said price was moving higher, and it ripped. It ripped good and hard, Mr. Krabs. We're closing above. We actually broke structure off of this downtrend officially now, because this was the high for a long time. This was the high, and we broke past it. We are now in an uptrend. The downtrend has ended, and as a result, we're profitable traders off of this today's trade. I am satisfied with this trade. I'm satisfied with identifying the building blocks needed to take this trade in confidence that price was going to continue higher. I'm also confident in my ability to identify these building blocks off of a respected fair value gap. So the result is that we get the entirety of this move up. I understand this right here could have been a precursor to it. This was where we started the day, mind you, right? I'm not allowed to trade until after the closure of this candle here. And we even had news come in, pushing price even higher. It didn't show a mad reaction off of it. It didn't show us a really bad one. But it did give us room to stay cautious. My psychology was in check the entire time. I had my music playing. I had my mind at ease. the entire time I was daydreaming while watching price action. It went higher, and that was one more memory I got to make with my loved ones. And I am happy. I'm happy. Respectfully so happy about the trade we took today. I am exceedingly happy about this. Exceedingly so. Respectfully. I cannot wait for tomorrow and what it has to bring. Knowing I could lose this progress tomorrow, is an eye-opener. Knowing I made this much progress off of that big a deficit in one day is an eye-opener. My eyes are open to the situation I am in now. My eyes are open to my inexperience. My eyes are open to the possibilities. My eyes are open. Respectively open. Responsibly and accountably open. I hope you enjoyed today's video. My eyes open to you guys as well. Drop a like if you enjoyed the video. I'll probably speed up the quiet parts so that way you're not sitting in silence. Drop a follow if you're on Twitch, or subscribe if you're on YouTube. I understand I'm not streaming on this channel. I probably will never stream on this channel. Do yourself a favor, because this channel is not just host to this kind of content. I've got something special in mind for Wednesday's stream if you're interested in watching my streams on Orb's Vault, or Logistic Orb on Twitch. Be sure to check both those links out. The Twitch link can be found in the description of this video. If you're wanting to check out Orb's Vault, you can either look it up on YouTube, or you can go to Twitch, and from there look at the channel description on that platform, and you'll see the link to Orb's Vault from there. Welcome to my VOD channel. Comment below what you think. What do you think of this trade? First off, this is a crazy, excellent price action day. This could not have been better for me at the moment. The setup was there. Profit order executed. We hit take profit. Thank you for watching this episode of Orb Plus. I will see you guys Wednesday for one of the most interesting streams you've ever seen. One of the more interesting streams I'll have ever done. I'll see you in the next one. Peace out.